Hi everyone, welcome to the live webinar on the Trump special trades. I see you're all up with the drill because what you've done is you've already told me where you're from. I've got Manchester, got Gummersall. I went to school in Fulneck, so not far from Gummersall, Bedford, Buckinghamshire, Runcorn, Malaga, my friend Jeff, Bath, Island, another one in Bath, Oxford. Welcome one and all. I hope you're excited for this. I've been working on this quite a bit, and so has my team. We've got a data team who pull all the data up, and then we've got a graphics team. That's me in New York. So I'm going to give you a market overview. And I was there, 2 or 3 weeks before the election? And yeah, you should be able to see the screen. You should be able to see me loud and clear as well. Let me know that you can. Here I am as well. Just want to make sure all the audio and everything is working fine. Let me know if this time works for you guys as well. So weekly stock market update, but a very specific focus on Trump trades as well. There's relatively few events that happen which are so seismic that you can reassess which investments to go into sort of midway through the year. Most things you're just waiting for time to tick along, earnings reports to come along. In the UK, Brexit and Liz Truss were two extreme examples. Obviously, 9/11, the financial crisis were others. Trump's re-election is one where it's thrown up a lot of opportunities, and I'm going to go through those in a very systematic, process-driven way, and listing specific stocks and the reasons why. I've got a Word document that I'm going to upload to you guys during the course of this, because that'll give you details on some of the individual stocks as well. So it's not just showing you a lot of charts on the screen, it'll give you stuff to take away. And so you can understand why some of the things are going to be moving, some of the stocks are going to be moving the way they're going to be moving. As well, as ever, not individual stock advice. This is for information and for education. By the way, one of the reasons why I've been traveling so much in the world this past year, partly why I was in New York to meet Great Investments Program clients, why I was in Bali and the Maldives, is because every time I say to my wife I need to get some work done on the book, she lets me get away for about a week. It's amazing. Write a book. That'll be book number 19. I'm also going to make sure you've got copies of this to download on the webinar as well. Okay, so you're going to get copies of these as we go forward. I'm also going to start a poll, which I'm going to publish on here, just in terms of the files. I'll just make sure you get a copy of the book right now. So you should be able to see that. Okay, and just put this away so that I can concentrate on everybody. I'm also going to answer your questions probably closer to the end. I've been fortunate in terms of reviewers of my work. I've got billion-dollar hedge fund managers, Bloomberg TV presenters, Financial Times columnists. The reason I say that is because on social media there is so much nonsense out there and so many people without any credentials, it really gets a little bit worrying. So first things first, I'm going to refer you, obviously I said, to the book, but also any of the links I mentioned during the course of this webinar, you'll be able to find them all from alpeshpatel.com/links. So if you miss anything, it's all going to be there anyway. When I reference my YouTube channel, or my Telegram, or downloading the book, it's all on there as well. It's just that's the only link you need. Okay. Now we saw, and I mentioned this before, how much the Dow jumped up. Well, where's the money to be made now? You see, a lot of people think, oh, you had to call the election beforehand in order to get these kind of returns. No, there's opportunities going forward. In fact, it's a lot more sensible to have waited and then decide what to get into, because you've got more certainty, whereas beforehand you were gambling. Even though I said Trump will win and it'll be inflationary, I had no idea it was going to be such a thumping win. I had no idea it would come out in 3 to 4 hours. I had no idea he's going to take the House and have the Senate as well. I had no idea Musk would be this central and they'd be hitting the ground this fast, with this much confidence, with this large a mandate. No idea of that at all. Okay, only that Trump's going to win and it'll be inflationary for the stock market. I was pretty, if you notice, I never said we'll do Trump trades before. I never said we're going to gamble on it, because it wasn't that clear. now we're looking at the opportunities going forward, and we're going to see this as well. Raghav, yes, is the answer to you. William, yes. Apologies if this is a bit late. Much better. Good, good, good. So Mitten, I'm glad the timing's good. So these are some. Now I'm going to look through some of these in detail. There's no point throwing a load of names at you because you need to know, first of all, what's the structure for these? What's the risk for these? Are they any good? And also, what's the explanation? Okay, because this is your pension, you might be talking about your children's ISA and so on. So these are some of the names which have been bandied about. And one of the reasons they were bandied about, there's all sorts of theories. This one's from FactSet. I'm going to give you my version as we go through this webinar. FactSet said, well, after he was elected first time around to the end of the year, these were the massive percentage gainers. Therefore, their theory is analyst consensus this time is this is what percentage is left and this is how much they've already moved. Now, that's quaint little theory. I will go through some of these, not all. I'll go through some of these and a bunch of others, but I will do something far more useful and specific. I'll give you explanations. I'll give you targets, timeframes, and stop losses, because in case we're wrong, we need to be able to get out, and we need multiple upside to downside. And these will be in the nature of investments. I'll also give you the risk levels as well. So it's a lot more specific for you all than just throwing a bunch of names. And then, you could have a name which is down 20%, but might end up the year up 50%. Well, we need to get some idea of risk and volatility as well. So I'll go through that. Now, first things first, before I go through, I think I've got about 50 stocks and about 50 exchange traded funds I'm going to show you during the course of this webinar. So you might want your phone with you as well. Those on the Great Investments Program, don't worry. You're not, I'm not giving the crown jewels away. I'll be giving you very detailed explanations separately on the Great Investments Program in terms of all of this. But for now, what I want to do in this public webinar is, well, give you the 10 explanations of what Trump the sequel means. First of all, for the stock market, yes, it is going to mean significant rises. Now, he's inflationary. He's going to be spending a lot more. He's going to be pressurizing the Fed to lower interest rates, which they may or may not do. It doesn't matter. The stock market is going to do better because he's already explained with corporation tax, he's going to be reducing corporation tax, whereas of course in the UK we said we're keeping it at 25%. You can see the divergence between the two economies and the two stock markets really clear. If ever you didn't believe me about putting your pensions into US assets, my God, we've made it very clear in the election of our government that the British government is going to take away assets to wealth redistribute. Now, that's fine. It's a socialist policy. Socialists were elected. That's perfectly fine. And they want to wealth distribute for social justice reasons. So you can't pass on assets to your children as easily as you could. You might be paying up to 67% in inheritance tax as a result. Fine. The Americans made it absolutely clear with this president: lower corporation tax, greater growth. In America, growth is more important than controlling inflation. In Europe, inflation is more important. If you look at a country like Germany, inflation is really important to be controlled. In the UK, we would sacrifice growth for controlling inflation. Okay, it's just a different economic mindset. There's also some political nuances. You'd never get as much a left-wing government elected in America as you have in the UK, and that's fine. Hey, whatever the people want, the people will get. The point being, our stock market is definitely going to stagnate more than ever in Britain compared to the US. So my SIP and ISA already was in the US since 1999, since my first FT column. I cannot emphasize enough how critically important that has just become, even more so going forward. And I'll give you the exact names and the kinds of returns and the reason why. Financials will do well. There's going to be a lot of mergers and acquisitions, not least because Elon Musk is about to IPO 4 or 5 of his private companies. The Boring Company is a private company. Some people don't even know what that is. SpaceX, he's going to IPO that. Why? The stock market is at ridiculous levels. His star will never rise higher than this. Sooner or later, in about 2 years, he's going to fall out with Donald Trump. Obviously, everybody does. And that's a different story. He's got 2 years in which to IPO that. He's not the only one. When the stock market's this high, there's going to be a lot of companies coming to market. And that's one reason, the banking side, let alone the trading side, why that's going to happen. The other reason is the Americans have made it very clear. You want to do business with us, you better be onshore. They're going to make it very difficult for you to just sell your products from abroad to America. You better have a base there. Okay. particularly if you're Chinese, you better set up, move capital there. Now, that's not actually as extreme as people think. I have a role with the British government where I've been doing that for 20 odd years, going out to India, China, Malaysia, Singapore, bringing cybersecurity companies, AI companies to the United Kingdom, telling them, you want the help of the British government? You set up your business in Britain, move your intellectual property, move your founder, move your capital, employ people here, hire people in Britain, pay corporation tax in Britain. Nobody says, Alpesh, you fascist. Guess what my government title is? You wouldn't believe it. Same one as Donald Trump's, Dealmaker. Been doing it for 20 years. When we do it in Britain, nobody knows. Well, nobody knows me. The Americans start saying the same thing, you fascists. Okay, so what's going to happen is you're going to get a lot more onshoring over there, which is going to boost their economy, boost their jobs, right? JP Morgan, I continue holding. Goldman Sachs, I continue holding. They're safer bets. I'm going to give you some of the ones which look a bit explosive and could be a bit scary, and I won't even put into my SIP and ISA. They're more for my fun money, my Trump trades section of the portfolio, which I think I'm going to open up on an Excel spreadsheet, just pure Trump trade ones. Energy, Chevron, Exxon. I'll go through these a little bit later on and show you these as well. Drill, baby, drill is the idea. Deregulation, oil exploration will continue. Now, you might say, what the hell? This is going to ruin the world. I'm not talking politics here. Okay, I'm talking pure economics. That's all I'm going to be talking about this. Elon, what a genius. He is, what people don't realize is Trump 2 won't make the mistakes of Trump 1. Trump, first time around, made the mistake of having competent people who are disloyal or loyal people who are freaking incompetent. This time he wants competent, loyal people. So if you take somebody like Musk, who's put the heads of his major companies into US government to remove regulations, to show what's slowing down business growth and remove incompetency. Now, the top staff in Elon Musk's companies are better than anybody working in government. We in Britain had Johnson and Dominic Cummings. Over there, you've got Trump and Elon Musk. There is no comparison when you're trying to shake up government. You're not going to be able to shake it up in Britain because there's nobody good enough to be able to spend the time, energy to go in there and say, this needs changing, this, I'm going to get shit done. The Trump Musk is competent, believe it or not. That's going to lead to more deregulation faster. It's not just going to be boosterism and a big game being talked like, say, Prime Minister Johnson would, without follow through. This is going to result in results. So there's a Tesla trade to be had. Now, there are a few companies in the world you cannot judge, and I've said this about Tesla ages ago, you cannot judge on purely their P&L, their balance sheet, their cash flow, and well, this year it should do 10% better because car sales. There are some companies where people like this will, I don't know, they'll issue an NFT and 52 million Republicans, they'll go out and buy the damn thing. They will do some crazy stuff to make money. You saw it with some of the SPACs and so on. There are a few people and companies who have the nous to do it. Trump, by the way, wants three things in case you haven't worked it out. He wants to be known as the greatest president ever. Well, he's had one hell of a landslide. Okay. Definitions of great. Well, you'd think Abraham Lincoln would be up there, but anyway, he's been re-elected. So all the liberals talking about, well, you don't get that many people coming to your rallies. They don't say that anymore, do they? Because it looks a bit stupid when you've won 52 million and absolutely trounced the opposition. Seems, forget it. He's won. Okay. The second thing he wants is the Nobel Peace Prize. So he's going to clear out Hamas and Hezbollah through Israel. They're going to give Israel a green flag. Now, the Brits have quite rightly, and the rest of the world has quite rightly pointed out, there's women and children and innocent men in that region. I'm talking economics, not politics. Okay. And that is going to eventually lead to the rest of the Middle East is not going to interfere with Trump. They might do with Biden. Saudi Arabia will completely fall in line and step back. Jordan ain't going to say anything against Trump. They might criticize the world looking away. So essentially what you'll get is something of, he's not going to get the Nobel Peace Prize, obviously, but he's going to try and end that conflict. He's going to do the same with Ukraine, and you know how that one plays out. One way or another, that there should be some peace dividend where your cost of living isn't going up in oil prices and taxes to pay for missiles blowing up shit in eastern Ukraine. That's what's going to happen. So that should lead to a lower cost of living back. So there'll be this peace dividend side of things, and oil prices coming down will help. His election, I'm talking about point 9 now, led to a rise in what Keynes called animal spirits. So I'm just painting you a picture at the moment. I'm going to come to individual stock. Corporation tax, he said he's going to reduce. So great. The businesses are more excited than they've ever been. In fact, economic data has not even caught up with polling those businesses, but I can tell you they're over the freaking moon. Okay, taxes are coming down. He's going to make the big companies who keep trillions offshore like Apple, this time they're going to be bringing it back and investing in America, and they're going to have to onshore and reshore a lot more. Doesn't mean they close their plants in places like India, because Trump wants that strategic balance against China. But those Chinese factories, you're going to have to make a really bloody good case why you've still got them. This is going to lead to a strong dollar, because money coming back into the US means the dollar goes up. Interest rates staying higher for a bit longer. They've probably had the last cut for a while, staying higher for a bit longer. Why? Because he's going to be spending. And a lot of money's been coming into the economy. That's inflationary. So you need monetary policy, which is independent central bank, to keep interest rates a bit higher. That keeps a strong dollar. That actually puts a cap on inflation, because the rest of the world have to pay more for American goods if they want to buy them. So the strong dollar is not necessarily bad. It's a good counterbalance against inflation running away. Tariffs are going to be selective and strategic. So it's not actually going to damage the US economy as much as people think, because they're not going to be all over the shop, and he's not as crazy as the legacy media likes to portray him. They'll be done in areas where America can develop and manufacture locally, and local Americans will get the jobs, as well as, so in his constituencies who voted red, and as well as others can substitute away if they don't want those goods. Quite frankly, there's very little out of China that you need. There might be things you want. There's very little you need. You can substitute that away. If the cost doubles, you don't have to have it. Get something else, go without. It's fine. They will actually have a counter-inflationary impact. There'll be a sticker price of higher inflation because tariffs have gone up. You don't have to buy it. You don't have to spend on it. So that actually is positive. In 2 years, he'll lose the House of Representatives. It'll go back to Democrat. He'll be able to do nothing. He'll be a lame duck. There'll be articles of impeachment put before the Senate by the House, and he'll probably avoid prison, because he's going to, before he goes to takes the oath of office, because it looks like they're going to delay imprisoning him, and he'll pardon himself, which will go to the Supreme Court, and they'll say, yeah, you can pardon yourself. Okay, so that's the summary. Let's get into the thing. Is strong inversely correlated to stocks? Not in this case, it won't be. As I said before, and I've been showing you this for about a month before he was elected, Schroeder's Trump presidency is likely to be reflationary. I mean, I didn't even say whether he's going to be president or not. I said, yeah, he's going to be president. It's going to be reflationary. That means inflation, but that means asset prices like the stock market increasing. Little did I think it would go up 800 points the next day. Okay, it's one thing for me to say, yes, looking at the data, it looks inflationary. It's quite another thing to say, yeah, but bloody hell, mate, you didn't call 800 points rising in the futures contract next day. Yeah, you're right. I didn't see that coming, which is why I'm a lot more exuberant about it, because it's not about the fact that he won. It's the size and thumping mandate with which he's won. Essentially, the opposition tends to shut itself down a bit and shut up a bit when it's lost this badly, or loses credibility, or both. So he really does have, for a very short period of time, that honeymoon period of getting anything done that he wants. Again, I'm talking economics, not politics. I'm not talking about mass deportations, what that means when you imprison children and separate them from their parents, what it means about abortion and women. And my thesis when I used to work in the US Congress, my thesis was about the politics of abortion in the United States. So it's a subject which I know a bit. I'm talking about economics, okay? S&P 500, 1 year without 10% correction under Trump, you're going to get those, because the guy is going to make some things volatile. He's actually strategically volatile. He understands game theory. He knows it is good if the other side doesn't know what to expect. For all NATO's whinging and the rest of the Europe's whinging about, well, he's an unknown because he's volatile, we don't know what he's going to do. Strategically, as a president, yeah, that keeps Tehran on its toes. when they think there might be a nut job. It used to be their monopoly to be able to do that to the West, because the West was so bloody predictable. So in actual fact, I think he does know what the hell he's doing, and that's why he ends up in places like North Korea. It just keeps them guessing. Okay, so that's where we are with that. We will get some volatility, but we will use that old rule I've told you about, Daddy Bear, to make sure we don't panic on those drops. And anyway, November and December on average is a great period for stocks, even without Donald Trump doing things. This is from Goldman Sachs. So that's going to be positive in any event. I'm going to come to specific stocks. This gap that I keep talking about every single bloody week, telling people, is it the UK markets or S&P or NASDAQ? Look at the gaps in your pension over the last 15 odd years. You've got the UK at 47, you've got S&P at 300%, you've got NASDAQ at 600%. That gap's going to get wider between Britain and America, let alone other parts of the world. I'm sort of can't look at every country, obviously, in this, but certainly you really are going to get left behind now, not least because your government in the UK is allowing you to keep less of your pension, and that's only going to be getting worse. I don't think we've hit peak Rachel Reeves. Assets, the government's made very clear, in case people haven't got this, the working people are people without assets, which I understand and respect. I grew up in Armley and Leeds. That's where I was born. I understand what not having bloody assets is. Okay, therefore, if you've got a pension, you've got assets. You've got a business, you've got assets. You're not a working person. And if you've got assets, then the socialist philosophy is those assets staying in private hands just perpetuates an injustice, because it has come to you by accident if you inherit those and you pass them on to family, which is why socialism and communism doesn't like the concept of the family. It prefers the concept of society. So anyway, basically your pensions are fucked. I mean, pardon my French, it's after 9 o'clock. And more so than ever, I want British people to be able to earn off the American companies growing, because you're going to bring the money back here and you're going to spend it. Well, you're going to need it here unless you move. You're going to need it here anyway, and you're going to need more of it than ever. Okay. And these buggers are going to be getting even worse. I mean, they've absolutely messed you up in terms of their relative index performances. If you do nothing else, just find the bloody benchmark and invest in the frickin' benchmark, will you? But these guys are going to continue going, but they're going to be absolutely destroying this country. I mean, I think they should be tried for treason, what they do to British pensions. That's going to look even worse going forward, because the gap between comparing them, not to a benchmark, but to what's happening in the American markets, is going to get massive, absolutely bloody massive. So what's going to happen to British pensions is they're going to lag behind what's happening in America. Forget pensions, forget benchmarks, forget bank interest rates. I only want to do 1% better compared to what growth the Americans are going to get. We're going to be buggered in this country, which is why I wrote my first column in the Financial Times in 1999, Invest in US Stocks. Now, for me, it's this. This is, if you're lucky, what your pension's going to deliver in a predominantly UK pension. 5%, and you're going to take 14 years to double your money. That's what the US is going to deliver for me. And if I get it even better, then that. Now, I expect to do better than that, because last year, this year, 2 years ago, the markets were great, but I'm going to assume the markets aren't going to always be so great. So I want to be doubling my money a lot sooner. Why do I want to do that? Because the freaking government's going to take 2/3 of my money anyway. I'm only making it for British taxpayers, and then they'll redistribute it to Ukraine in the form of missiles, which is fine. They can do as they wish. That's how it works. But I'm going to need a lot more than I thought for my pension, as is everyone else. Okay, now I'm going to continue selecting my stocks the same way I've done. I don't care what governments, what happens in the world, it is going to be, because one truth is going to remain: undervalued companies will continue doing better than overvalued ones. Growing companies will continue doing better than ones which aren't growing. We'll want those two. That's an incredibly good and important algorithm to narrow down stocks. A lot of people try and reverse engineer this on the internet. Ain't going to happen, sunshine, because that, unless you want to read the same academic literature I read from Daniel Kahneman, Eugene Fama, and Richard Thaler, and they all went on to win the Nobel Prize in economics, and I just took what their research said. This is from Goldman Sachs Wealth Management. Companies generating the most cash based on investments, they still are going to, because certain truths are going to remain eternal, whether you've got Trump or not. Okay, this momentum from the hedge fund industry. Some hedge funds are purely momentum, like Winton, AHL, a lot of D. Shaw's work, purely momentum. People think that means you're brain dead. No, it doesn't. It means you're making bloody money. Okay, a lot of Jim Simons's fund, Renaissance Technologies, was momentum driven. Sortino, we need that to be green as well for our stocks. Why? These are the conventional boring stocks, okay? The pensionable stocks. I'm going to give you the Trump trades in a second, which have a bit more zip. These are the conventional ones, okay? Why do we need Sortino to be? It just means high average return and low volatility of missing that. So they're consistently getting that high return. They get 10%, 10%, 20%, 30%, 40%, whatever the average is, 40%, 40, 39, 40, 39, 40, and very quickly they rebound. Nothing guarantees the future. The past certainly doesn't guarantee the future. Okay, but we're going to use that for the pensions continuing forward. And that's all in the Great Investments Program. What I'm going to talk to you in this webinar is about the Trump trades. Now, over the past year, yeah, it's been stonkingly freaking brilliant. I would not be surprised if this repeats itself next year. I wouldn't be surprised. I would not be surprised. Doesn't mean it's going to happen, but I want to be in a position that if it does happen over the next 12 months, that we're still in these trades, okay? And I'm in Tesla in case people missed it on the Telegram. I might only have told my private Great Investments Program people back into the Tesla trade. Okay, and I continue holding JP Morgan and Goldman Sachs, and even more so now that Trump's there. If he wasn't, circumstances change. Well, portfolios might have to change. Okay, I'll come to ExxonMobil in a second and Chevron, but that's a lot of green, and that green I think is likely to repeat itself. But forget 1 year. Let me actually make it easier on myself. This is going to repeat itself over a 2-year period. Okay, so over the next 2 years, something like this will almost exactly the same as this. So not 1 year, 2 years. Let's say 2 years. Makes it easier for me. Okay. Now let's dive deeper into these individual ones. A lot of stocks. I will go into all those questions a little bit later on. Okay. Thank you very much, Bob. This was the past week. Now we know in the past week, 99% of these stocks have moved in the direction they've moved because of Trump. Okay, there are very few events that tend to happen which are industry-wide. Like when COVID happened, everything moved because of COVID in that first week or two, and then they sort of might move for different reasons and earnings. So it's a unique time to observe something and what's impacting the markets. And you'll notice, for instance, what Microsoft barely budged, Apple barely budged, but you can see others like Nvidia, because he's likely to deregulate artificial intelligence, because Elon Musk took a bit of a rise. But there's another reason it's taken a rise which people have missed with Nvidia, which is they've forgotten it produces graphics cards for mining crypto, including Bitcoin. Bitcoin's at an all-time high. Means it's more economical now than ever to mine Bitcoin than if it was dirt cheap. Now, if you mine it and use some electricity, because that's the main cost of mining Bitcoin, electricity, you're getting more for it than you were before. It's like oil. Okay, you're getting more for oil. Price of oil goes up, makes digging a well worthwhile than it was if the price of oil is low. Okay, so that's some of these. Okay, we're going to go deeper into all of these. Obviously, Tesla has shot up, and we'll look into these in this webinar. Okay, I can't go through every single one of these. I mean, it'd be fascinating to, by the way, but I won't go through every single one. But I'm going to go through a whole bunch of these. I think I've got a poll up. Will the Dow be up by the end? 81% of you said yes. Okay, so that's good. You can see that 81% said the Dow will be up by the end of this year. That's perfectly fine. Let's see what you think about the FTSE. Here we go. Now, markets. Over the past year, we're now at an S&P 35%. Okay, NASDAQ 35%. I'll tell you what I'll say. I'm not going to tell you what's going to happen in the next 12 months because I don't know. I don't really know. What I'll say to you is we're going to get that again over the next 2 years. Now, we might get more than that, but I think we're going to get at least 35% over the next 2 years. Okay? And I'm going to position my portfolio accordingly, i.e. bullish and be in equities. Now, I'm going to talk about them being overvalued because they are, and what that means and how we can handle that and what overvaluation means and all the people who are saying it's about to crash, because it might. We'll have to look at that. And I'll show you how we find out and why I don't panic over the last 25 odd years. I've written it in my books anyway, but the one methodology that I use, which is looking at average prices, short and medium term, because prices is where people are putting their money. It doesn't have emotion to it. And a price is something we can all agree, whichever language we speak. You know, we can all agree 1 + 1 = 2, 2 + 2 = 4. Everything else we disagree on. Okay, but that's why I look at average prices, short and medium term, and I'll explain what that means, and I'll show you that in the screen and how we'll know if there's going to be not necessarily a crash. Crash is about speed. I don't care about speed. I don't care if something drops 75% in a week or in a year, in the sense that it's still bloody dropped and I have to miss it. You know, whether the car comes at me and hits me slowly or fast, yeah, I'm still going to die either way. Yeah, I know I've got more chance of survival if it's slow. So that's where we are. That's what I think is going to happen. Now, has it been a good year? Yeah. Did I know it was going to be such a good year? No. Let's be absolutely clear about this. Has it been a good year? Yes. Did I know in advance it was going to be a good year? No. If you've watched my broadcast throughout this year, you will know every time I said, well, there's nothing for me to do, I'll just wait. I haven't said, wow, we haven't got to that 35% yet. Wow, my time machine said this is where we're going to go. No. I'm in a position, I'm being driven along by the market, I'm sitting in the back seat and I'm going, don't need to do anything yet, don't need to do anything yet. That was most of the year. Don't need to do anything. Okay. Even when it fell here, oh, okay, that's a mama bear. We've got to wait. Don't panic. We might have to panic if it falls further, but it didn't. Now we don't need to panic. We just wait. So you're sitting there at the back going, you know, like when you sit in the passenger seat when your dad's driving or your mum's driving, and sometimes you press the accelerator or the brake usually and go like that, but you actually haven't reached for the steering wheel and gone, oh my God, stop the car, let me out. That's what it's been like with the market. It's been like, a few times, okay, but didn't have to grab the steering wheel, stop the car and jump out of the car during the course of the year. That's my point. I didn't know we were going to get there safely. I thought, great, wonderful. So the importance of the reason I say that is very important to know what your job is. Your job is not to over forecast. By the way, that's the UK markets. When did we elect our prime minister? There we go. That's us. Anyway, ETFs 1 week performance. Now I'm going to do, when I put this together and look at this in a week, the Bitcoin ones have gone through the roof. I did say in previous webinars, oh look, Bitcoin's going up, but I said I'd do a webinar and I wish I'd done it sooner. Obviously now. I will do a separate webinar on this because this 1 week performance since Trump has come into office is about the Trump trade and it is about what's going to progress. But because these are funds, exchange traded funds, I think they're incredibly important to do as just a separate one on. Otherwise, we're going to be here all night. So I'm going to stick to stocks in this one and do the funds separately in a separate webinar. I'll try and possibly even do it this week, because I do want to go through these financial ones and these energy ones, because now it's a different story, and these small cap ones, because we're going to get a broader market rally, hopefully now, and some of these, and whether crypto is worth doing. I've always tried to avoid talking about crypto because every time I do it on social media, you get a whole bunch of scammers joining the comment section. Okay, so it just worries me talking about crypto. But anyway, the ETFs, crypto, by the way, I forgot to mention. So Elon Musk, Dogecoin, backed Dogecoin, and he said this is a piece of crap. It is non-existent. He actually said, has no value. He said other coins might. This has no value. You know what happened to Dogecoin? Shot up. Trump and Musk know the same thing, that you can sell anything and make money out of it. Now, Musk actually sells real things like cars, but he knows Dogecoin. I remember at the time, he took $1 billion in profits out of Dogecoin. Didn't he buy a load of Dogecoin out with Tesla money? Because all of a sudden, shit, Tesla needs money. We just made an extra $1 billion. So he's going to do IPOs and he's going to issue coins. And Trump wants to be a trillionaire. I said he wanted 3 things: Nobel Peace Prize, presidency. He's got the presidency. Third thing was to be a trillionaire. Okay, I'm not sure he's going to get the Nobel Peace Prize or trillionaire, but he's going to issue. He floated Truth Social. Look at its stock price. I've just opened an account on Truth Social because I thought, bloody hell, the guy's proved it. If he didn't win the election, I would have just said, yeah, Trump. There's an orange bloke I heard of once. He's different now. So same with them. They're going to issue more crypto to raise money from 52 million Republicans who bloody love them. they're only going to love you for the first couple of years, maybe into year 3 and 4, possibly. Okay. Now, I want to show you something interesting on exchange traded funds. Don't just blindly follow this. Over the past week, since Dancing Lover Boy here became president, these are the returns. By the way, I didn't have any of these, just so you know. I don't gamble like mental on leveraged Bitcoin, Coinbase, even Tesla. You know, people say, did you do the Tesla trade before he got elected? No, because I really didn't. I try and avoid gambling at all. It's my pension and ISA we're talking about, okay? Maybe I should have done more webinars on trades, you know, and higher risk stuff if people want to. I try and stay away from the higher risk stuff. So anyway, this is what's happened in the past week. These are leveraged. Don't do these. This is nuts. Obviously, there's going to be some people who've gone crazy, and some of this stuff is also going to come crashing down possibly. But I'll tell you what I want to show you, and I'll come back to this when I do the webinar on ETFs. So you've got the blockchain ETF at 47%. That's unleveraged. Crypto and blockchain ones where they have a selection of stocks in that space. Okay, the rest are all largely leveraged, other than the Coinbase one, which is 1 times anyway. So it's up 62% as Coinbase is, but I'll come to that in a second. I better go back on the chat. So I will. There's a lot more I've got to go, and I'll talk about Tesla. I will answer all your questions, so don't worry about that. I'll stay up until I've got to answer them anyway. So let's look at the first batch of Trump trades, okay? And the first question I ask myself is 40% reasonable in the next 12 months based on the existing direction of the trend? Can't just pick up 40% from plucking it from the air, okay? You've got to have some reason for it. The next thing is, would a 20% stop loss be sufficient? In other words, when would it not be sufficient? It wouldn't be sufficient if the market's so volatile it could easily drop for 20%. It wouldn't be sufficient if it dropped 20%, but you wouldn't know that definitely the 40% isn't going to work. Do you see how the trading mind works? The stop loss has to be a point where you know that the other side isn't going to happen. So that's why you put it at 20%. And then you've got to bespoke it. This is the bit which I do for Great Investments Program. So my students watching this, if they are, this is the bit I'll be doing for you. The due diligence part is the drawdown depth and duration suited to your risk profile? If something drops too much historically and takes too long to recover, that's your risk profile. If you do not like that risk profile, you should not be in that security. You cannot say, no, I'll get through it. The stomach churning pain, I'll get through it. The other thing is just make sure you don't lose more than 1.5 to 2.5 of your capital if that stop in that stock is it. That's the money management rule. Okay, that's money management. Again, I've explained it in very superficial terms. Some of you might need to let that sink in, as Elon Musk would say, let that sink in. So let's look at some of these which have come up, named in the popular press or otherwise, for various reasons, of Trump trades. This is the first batch, and then I'm going to give you a second batch, which is even more explosive. I'm going to go through these with a basis. You've got to ask yourself, do you think, first of all, the thesis holds? Lockheed Martin. I'm not going to go through thesis on every one. Okay, so this is the idea of defense. Well, surely with defense, it should, if there's a peace dividend, it should be less likely. Having said that, I think he's going to go to Saudi Arabia and the rest of the Middle East and say, you better buy our machinery. And they tended to. Remember last time, his first official state visit was to Saudi Arabia. Very unusual to go to the Middle East. I don't think any US president ever done that. He didn't do the usual, I'll go to Europe. Okay, or a NATO summit and then pop over to Britain and Germany and France. He didn't do that. He went to Saudi Arabia because he knows where the bloody money is and where the next Trump hotels are going to be. This time he's thinking far bigger than hotels. He's thinking trillions. Anyway, so if you were looking at this and you believe that that angle holds, that line holds, then you'd also have to hold that 20% doesn't knock it out, okay, by just sheer volatility, and that would hold for that. I'm not sure with this I hold that 40% also. I'm going to show you ones and I'm going to give you my level of confidence as well. Deepak, this is not giving too much away. For Great Investments Program, they get the specifics. This is general, okay. Northrop, similarly, and there's so much. The Great Investments Program, people get the bespoke one-to-one. This is general, not going to be suited to everybody. That's why on the program, with the Great Investments Program, you fill in your risk appetite, and then I say to you, right, let's fit this out to see if it suits you or not. and also the programs for life. This is just Trump this week. Northrop, again, defense, you've got this, but you've got your stop, okay, at 20. Now, you might say, I don't agree with that. I don't like the volatility. I don't like the due diligence. If you're on the program, we'll go through that with you personally, one-to-one, to work out whether it suits your risk appetite, okay? This is general one, sort of one side. It's the sort of the Marks and Spencer's suit, as opposed to the Savile Row, which we give you on the program. ExxonMobil, the idea is you go in that direction, but you've got the 20% stop loss. Okay, now that might not suit you for a variety of reasons. And if you're on the program, we'd discuss it. For instance, the falling MACD, you might say, no, I don't want that momentum, but I'm just showing you the Trump trades and the names that have come up. Very simple. That'd have to be the direction. Now, you might say, no, wait, that's not going to happen. That's too steep. It's not going to happen. Okay, but these are the names which have come up under Trump trade. Okay, and then you've got your 20 on the downside as well. This is not last time. JP Morgan Chase, okay. And by the way, the other thing is, if in doubt, like you say, well, actually, I'm not sure about defense and financials, leave them. There is no certainty. And you're absolutely right, Julian. There is no certainty. So this time you might say, you know what, I'm not going to do the ones which didn't work last time. Okay. That's perfectly valid, because I am not telling you that I've been in my time machine, gone into the future, and I can see what's happened. I continue holding my JP Morgan Chase. Now, this is an interesting phenomenon which has happened with Trump, with the S&P, which I'm going to come to in a second. It's broken above. This is a measure. The MACD is a measure of medium and short-term average prices in the security. Okay, in broad terms, and it's broken above its previous ceiling. It sort of had escape velocity of gravity. Normally, when prices become overextended from their average, longer term average, okay, they tend to fall off, right? This time, what's happening time and time again, there's a bit of escape velocity. And this happened particularly, say, with NVIDIA, which had nothing to do with Trump, because it was about 18 months ago. You're getting this kind of thing happening more frequently, which worries me, because it's moving quite sharp, and you'd have to put a tight stop loss, maybe, like I said, 20%. You might not even do that. You might say, if once I make a big profit, I'm only going to do a 10% or whatever. But what I'm saying is, it does mean it's more momentum driven, but I continue holding this from the time we bought it. Same with Goldman Sachs, and continue holding since the time we bought it. Notice how that momentum now, when it's more a momentum trade than value, growth, income, all these factors are important for moving stock prices. When one of those factors is more important and starts driving it, there's a greater risk of sharper pullbacks. And the way you protect that is watching more closely, but then the compensation you're getting is phenomenal returns. So it's time is money. Well, you're going to have to spend more time, but you're going to get more money out of it. And you might reduce that risk by going, as I do on the Great Investments program. I said to my students, well, let's work it out for you. Value, growth, income, how much protection do you want on the downside? Okay, but these, I'm just showing you in generic terms what you'd do. You'd want to make these bespoke to you, which, as I said, we do for the program. That'd be the idea. That'd be the idea. That'd be the stop. Okay, and that's another Trump trade. Now you can look up Nucor and why Caterpillar would be one as well, and it's a 7. And you can see there's a lot more of these just shooting ahead. So you can also see the excess risk that these are implying. And you might say, no, I don't like this one, Alpesh. I don't like it because I think it's riskier, because UBS don't like it. I don't like it because it's overbought, so I'm not going to have this one. What I'm showing you is how to do the investment structuring under Trump. Okay, NVIDIA, as I mentioned, it's an 8. I continue holding it. When we got into this in January 2023, it was one of several picks. I didn't know it was going to be this big. Otherwise, I would have just picked this and nothing else, because the numbers were there. It can drop 33% quite easily. So you might have that, but you may want to put the trailing stop back here, which is quite a way away. But again, you could make that bespoke to you. Again, if you're on the program, speak to me about any of these you want to follow up with, so we can make it customized. Coinbase, because of Bitcoin, because of crypto. Geo, they make private prisons. If you're going to be deporting millions of people, you're going to need to put them in prison first before you actually deport them. As I said on the private Telegram channel, you might not want to do this just out of ethical reasons. You might forget that there are some ethics behind all of this. Anyway, This is not for me, by the way. It's not one for me, not least because of the numbers we're talking about and the risk level. And I think the stop would have to be somewhere here, and that'd have to be the upside. I mean, I just think it's too volatile and too speculative for me. So I'll answer your question in a second, Santosh and Sashwat, as well. Vulcan Materials, whilst it's an 8 on our conventional measure, again, it's one of those overbought ones. The idea is on a Trump trade, that's meant to go in that direction. That's where the stop would be. Okay, Pfizer, not for me. I don't like the look of something which has fallen. But again, the idea with some of the drugs ones, this could go either way, but they've put it down as a Trump trade. It could go either way because if you've got RFK in the health department saying no more vaccines and drugs are just generally bad for people, stop freaking taking them, then I don't see how Pfizer does so well. But anyway, somebody had put it as a Trump trade. I'm talking about, by somebody, I mean, we scoured the media for seeing what was coming out and analysts and banks and see what names. I'm going to show you ones which actually have moved up as opposed to this. So again, it might be one where you say, listen, not for me. Or, hey, you know what? There's going to be a lot of orange men wanting to take more Viagra. So Pfizer, I mean, they don't hold the patent on it anymore. Maybe that was the reason for it. But whatever it is, that's the angle. The stop loss is really tight. It's here. If it goes below there, so you're risking very little for a potential upside. Anyway, that's supposed to be the one. Overbought yet again, but that's the angle, and there's your stop. Tight stop, upside, nowhere near as this guaranteed. And you would say, no, too risky, but that's part of the Trump trades. And you might say, well, I don't want this one. I'll take some of the other ones. Similar with Union Pacific, growth, railways, all the rest of it. That's the idea. Your stop loss can be really tight because if it's supposed to go here, then that shouldn't happen. Okay. Now, I personally wouldn't do that when I look at what I've got in my pension, what else I've got, where everything else is. So with any of these, you can't just throw names at people and say, yeah, that's it. I think it has to be bespoke, which is what we do on the program. We say, right, let's look at what else you've got, what your risk appetite is, what the downside is, what the upside is, what returns you're going after, how old you are, how much is in cash, how much might want to be in lower volatility funds instead. These are factors you've got to consider. I'm throwing names at you as if you're a 20-year-old who just wants to play stock market fun. Okay. Sideways for the moment, but FedEx was one of those mentioned. Whilst it's a 7, it's a bit sidewaysy. Should do that. Doesn't look as exciting as what's implied by Trump trades. Home Depot, again, consumer discretionary spending increases. Why? Because there's supposed to be more jobs, more growth, lower corporation tax, people spending more money. Now they know where they stand, lower interest rates, presumably. Well, all of these things should help. Again, becomes called a Trump trade, ends up over there, and that's the angle you're looking at, and you're putting a stop somewhere around there. Okay, similarly, Walmart, spend. Consumer discretionary have already jumped up, but it's overbought. Look at that. It's crazy. Not one I would normally do, but now might look a lot more sensible based on your risk appetite. Connor is the guy I was talking to. General Motors has come up, another one. Again, same old, they're all similar in the process. Okay. Tesla, I've already mentioned. For me, where are you going to put the stop? You're going to put it there, you're going to put that. You might even say, I'm not going to put any stop because it's not going to collapse, Uncle Alpesh, whilst Trump's there. So over the next 2 years, screw it. I'm going to take the stop off. And any point in the next 2 years, this doubles my money. I'm out of there then. You could structure it like that on the basis that the momentum, here's one which isn't overbought, is that it's a little bit overvalued on conventional measures, but that's an interesting play. Okay. Bank of America, there's your angle. Banks do well, right? Morgan Stanley, same thing with the banks, and your stop goes over there. Now, if this pulls back and the whole Trump trades fail because something happens, he gets shot, I don't know, okay, then all bets are off. That's it. It's done. You had your chance at it and it didn't work out. There is a danger of just doing one theme, which is why we never do one theme on the program, which is, oh, just Trump trades. We want value, growth, income, cash flow, Sortino. Okay, so it explains this also the risks of just doing one theme. Apple, I continue holding, as you know. Cisco, the angle would be, boom. Okay, IT spending starts increasing for all the reasons that we've already mentioned, and your stop becomes somewhere down here, pretty tight. So you know, because if it's a Trump trade, it should go in that direction. It shouldn't be pulling back, should it? because it's one thematic trade. And it is an investment like a trade, as opposed to what I normally do in the pension and what I'm saying to you we do on the Great Investments Program. This is what's going to happen over the next 2 years, which I'm more than happy to say as close as a guarantee as possible. This is the frequency of 2-year S&P 500 returns since 1950. The average positive return is 32%. That will happen over the next 2 years, is my take. Or it's the most probable likely outcome. You know, if you do a bell curve, what's the most likely? What's the mode? That. Okay, and it happens anyway, 88.5% of the time. So you might as well, Alpesh, genius. You're not a really good predictor. Don't think that's going to happen. If it did, I'm going to show you what we're going to do with the S&P chart in a second to watch out for and to stop that. Okay, do continue watching these. In 12 months, I've seen my 30% increase in my portfolio. This was Trevor Atkin, and you might say, well, Trevor, it's not Alpesh. It isn't. It isn't me who did it. It was me who showed Trevor, but it was the companies that did it. And this is important. People seem to sometimes think, I was speaking to somebody today who was interested in the program, and they said, yeah, they were almost implying that I either had a time machine or I could see into the future with a crystal ball, or I could create companies that didn't exist. So in a falling market, I could come up with a name which doesn't exist and it would go up. Nope. It's the companies that do the returns, not me. If you want to see videos with people on the program, there you go, alpeshpatel.com. They're actual videos. You can actually hear them speaking as opposed to just sort of quotes on social media. Okay, now S&P, this is really important. Remember that point I said to you that when prices move too far from their average, like here, they tend to revert back to a mean, even if it's moving too far away from a rising average. What's happening now is, unusually, a lot of them are having escape velocity, and I think Trump might be the instigator now for this at exactly the right time. Instead of it moving back to, what's happening is they're moving further away, and therefore the mean starts to move further away. Now, this happened most obviously with, say, NVIDIA since January 2023. Okay, it normally requires something really significant to make that happen. In the case of NVIDIA, the massive AI boom. It doesn't just happen naturally. Naturally, prices tend to mean revert. I didn't invent that. I didn't think of that. Jim Simons, greatest fund manager who ever lived, the hedge fund manager, came up with that in terms of mean reversion. Okay, well, many have come up with mean reversion, but this sort of analysis. Anyway, it looks like, I'm not guaranteeing it, it's what's happening with the S&P. If it does, then that's what should happen. I'm not going to say that's what's going to happen. What I'm going to say is we're going to get 44% over 2 years, or 32 to 44% over 2 years. Now that means with a bit of skill and all my experience and my wasted childhood in doing nothing but investing and my 18 books and everything else, I should hopefully get more than that in my pension. So if my pension doesn't go up by at least a half over the next 2 years, I'll be very, very disappointed. You might say, screw it, Alpesh, why don't you just do 3 times leverage on Tesla and nothing else? I'm sure I will regret not doing it. Please mark this point in your diaries that Alpesh said on the 12th of November, he's going to regret not having 3 times leverage on Tesla in 2 years' time. Yeah, I'm sure I will. But imagine explaining that volatility to my wife. That's why I say what I'm telling you here is one thing. What you ought to do if you're in the Great Investments Program, DIPAC and so on, what you ought to do is speak to me about making it bespoke to your appetite, because I can't do 3 times leverage because my wife will kill me. Even with all my expertise, I can't beat her with the books and say, look, sweetheart, I know what I'm doing, woman. She don't trust me like that. Okay, so that's where we are with that. Now I'm going to give you some more Trump trades. Now this time I'm going to give you the ones which have gone up the most in the week since he was elected, not the ones which the analysts and the bankers and the talking heads have said are Trump trades, the names I've already shown you. I'm going to show you ones which actually went up since he got elected in the past week. So we're doing this on the anniversary of his coming back. Okay. Santosh, equities mean reversion. The mean can rise. So mean reversion does happen in equities as well. It's just that the mean rises. Okay, so what happens here is with these 100% in 12 months. Is that possible? That's the question. The stop loss I've widened because these are higher risk ones. You still need to make it bespoke. If you're in the program, speak to me, because its due diligence is draw down. How much do they draw down? How much do they fall on the rises? And then how quickly do they revert back to the price and the broader trend they were in? They're not all on trends. Okay, so if you look at, say, something like Nvidia, which is on this, there's a clear average around which it is moving, the mean around which it's moving as it rises, and that mean keeps moving up. The average price keeps moving up, okay, which is where your confusion, Santosh, comes from. And here, when you get the quick rebound back up, your risk appetite is based on how deep a drop you can take and how quickly the rebound you need to see. In other words, how long you can hold a loss and how deep a loss you can hold. That's your risk appetite. Risk appetite is only two things. How big a loss can you take and how long can you take it for? In other words, how deep the cut and how long the pain. That's all it is. Okay? If it's less, those two numbers, then you've got less choice. That's fine, because you don't need a lot of choice. You just need enough to fill your portfolio. Okay, that's why people get risk and reward mistaken. They think, oh, if I take more risk, I'll get more reward. They haven't thought it through. You can take more risk by crossing the road with your eyes closed. Doesn't mean you're going to get more reward of getting there faster. Okay, more risk means less choice if you keep your requirements still stringent, right? So we might have less choice if when we make it bespoke for those on the program. Now, you probably don't want to lose more than 1.5 to 2% of your capital if your stop loss gets held. So that's your money management. So these were the biggest movers in the past week. Now, don't jump into buying these, for God's sake. Wait, calm down. This document, which explains some of the reasoning, which you might want to read, I'm going to make available to you now. I'm going to make that document. So I created this before the call. Here it is, Trump document. Okay, so I'm going to share that with you. And that'll explain each of these stocks and why they might have moved. Why the real reason they moved, who knows, but it probably is. So for instance, it goes through these, and I'm going to give you the ones which you might want to look into and look interesting. Foxo, for instance, which is not one I would do. Okay, I've put in red the ones I think which are worth greater examination. They're not ones which I'm approving and I'm saying I'm buying or anything like that. I'm saying they do greater examination. Foxo, biotechnology, especially focusing on aging on Trump's potential support for deregulation biotech healthcare sectors could make companies in this one more attractive. Well, clearly somebody thinks so. 400% up in a week. Does that mean they'll continue going up? I don't know. These need a deeper dive. Okay, there's only so much time. And I might do these. What I'll probably do is I'll take the ones that I've marked in red, give it to my team, tell them to pull down the charts, and I'll do a special webinar for the Great Investments Program on those and see if any of those meet our requirements of value, growth, income, and so on. In fact, I'll do exactly that. But for the moment, for the public, what I'm saying is have a look at those if you wish, but don't forget to structure it accordingly, because you can have the right stock and you mess it up because you hold it too short, you panic when it drops, you haven't worked out your risk appetite, downside, upside, you mess it up. And 99% of the time, people without a bit of hand holding kill golden geese all the time. And if you want proof of that, just go and ask how many people sold Nvidia too early, Microsoft too early, Apple too early, all of these too early and too soon, and then regretted it, and then got back in after it had rebounded and just left too much money on the table time and time again. Okay, so this document is, you should be able to download now. I hope you can see it under Trump document on the screen somewhere. It should appear. Alistair says he's not received the link to the file. It should appear somewhere on the screen, because I'm not on your side. I'm always on the presenter side. There should be somewhere where you can see on the screen. There might be 3 little dots somewhere which you open and press, but the file should say Trump document. Okay, and it's basically essentially this document that I am. Yeah, it says I'm sharing. It certainly says I'm sharing at the moment. Okay. I'll look at other ways of doing it. If that becomes a problem, I might be able to just add it as a document on here. I had to expand the file section. It's under the file fab beside poll. It's under the file next to poll. Somebody said it's under files next to poll. Okay, so that might help. Thank you, everybody, on that one. Right there. As I say, I'm not sure if I can send it some other way. Now, there's more to be done. There's more coming. Sorry, it's dragging on a bit. These, as I said, I will over the next few days for Great Investments Program do a specific one. Probably won't be tomorrow because I've got quite a bit on tomorrow, but it might be very soon on that. Anyway, I've already covered that. That's the private prison. I mean, a lot of these you're going to think, no, crazy, speculative, don't even want to go near it, which is why you're going to need some kind of structure and stop loss and this. Okay. But we'll make that bespoke for you for anybody on the program. Okay. Now, remember, SIPs and ISAs, if you've not done it already, very easy. You don't have to use Barclays. You can use Hargreaves Lansdown, AJ Bell, God knows, Free Trade, whoever. You just open the account, you put the money in. This is what already has been happening before Trump, before Labour. Okay, has your pension lost a fifth of its value this year? Okay, that's already been happening. Give workers power to ditch pension schemes. The pensions they've been coming after for bloody long enough, and that's 2023. That's not Labour's fault. Okay, that's not Labour's fault. That's fund managers' fault, and those bloody fund managers are going nowhere. Massive losses despite FTSE highs. Okay, that's Guardian. That's not Labour's fault. Pensions have been getting screwed even before Labour joined the party, and pointless expense for investors. This is Telegraph. That's not change. So please, please be careful about it. Do follow me. Don't connect with me unless you're on the Great Investments Program. Follow me on LinkedIn. I'm at their offices tomorrow, LinkedIn's offices. I'm a top voice there. I'm at their offices. I'll do a little video from there. Okay, this is going to continue. So on top of the government policies, you've got poor fund managers. So I can't say more than this. Please make sure you're looking at your pensions and these things don't happen. I'm going to answer the Q&A now. Okay. I've been switching virtually all my stocks from UK to US. That was me in 1999. Yeah, believe it or not, that's me. Okay, there we go. September 1999. It took this long for the rest of the industry to catch up. So I'm only 25 years ahead. Only 25 bloody years ahead of them. That's Blue Whale. Another one. 27% of your pension gone because you think you get to a fund manager, you're not going to lose a quarter of your pension or a half. Now, I didn't do these returns. What I mean by that is Crocs did them, Generac did them, the market did them. People think I can invent companies, I can see into the future. I can't. What I do is value, growth, income, cash flow, Sortino, and then if the market gives a tailwind, we do well. If it doesn't, we won't. So 2022, 0%. It's a little bit more than that, but assume zero. Assume zero when the market fell 20%. Zero. What's your average? Well, in 2022, it was 0%. Well, people think, what's your average? What's your average in a good year like this year? Well, I didn't do it. The S&P did it. The NASDAQ did it. They go up 40%. I look a genius. I don't deserve to look a genius because I didn't invent those companies that we invested in. Okay, 12-month holding period, 25% from entry drop. Again, if you want to read what people think, alpeshpatel.reviews.com. That 40% in years like 2021, 2023, the best way to look at it is not what's the average, what if the last 7 years repeat themselves in the next 7, which included COVID, then when would you get those 40s? You'll get them in about 4 of those 7 years, roughly, because that's what happens. You get that massive tailwind. I didn't invent MedSpace or Nvidia or Meta or Sterling Infrastructure or Tesla or Amazon or ServiceNow. And sometimes they're bloody obvious names. Okay, so I can't take credit when you get stupid returns like that because the NASDAQ was up 55%. I'm not trying to be sort of fake humble, but really clever is people who create those companies. I just ride their coattails and say value, growth, income, momentum. Momentum is critically important, by the way, and also critically important is this, which I stole from Goldman Sachs, which is croaky, cash return on capital invested, which is cash flow based on capital. You buy something, you get cash coming out of it, cash cow. Companies who are the biggest cash cows get 30% per annum returns on their stocks. Their stock prices go up 30% per annum. That's from Goldman Sachs Quantum Database. So we took that and said, we want to tick that box. We said nothing else. We didn't say we guaranteed it. We didn't say every stock's going to deliver it. We didn't say anything else. We just said, okay, that's how they pick stocks. That's what we'll copy. Okay. So my reviewers are hedge fund managers and Bloomberg TV and institutions. If you want to learn more about it, you're more than welcome to get a tour from Paresh. Paresh co-authored these books with me, by the way. He launched all the strategies for a hedge fund, Marble Bar, which is now I think it's $4 billion hedge fund. And he used to work as a floor trader for David Kite, which is how I know him, know Paresh. So we co-authored some books together because he really knows his stuff. But have a look at that if you want to get a tour of it all. I'm going to answer some questions. What does CROCI stand for? Cash return on capital invested. Maz, somebody said sound is gone. No, David, don't do that to me. Andrew looks overbought on RSI and MACD. I don't look at the RSI because it's if you've read my books, you'll see why it tends to be oversensitive. Watch like a hawk and have stop loss. Yeah, which one are we talking about, Peter? Hi, Alpesh. The Quality 5 Plus have given good long-term gains that you have more confidence in. Why not only invest in those? Devak, absolutely, you could. You could just keep it simple. I'll tell you something even simpler. You could just invest in some exchange-traded funds, the Quality 5 Plus, S&P, NASDAQ, if you wish. Watch out for the daddy bear rule, okay? And just have the daddy bear rule. You could. The reason, in a way, that would make for a very bloody short and boring webinar. People want more than that. So I'm just catering to what the public wants, almost being political. Otherwise, I could just say to them every single time, as Warren Buffett often says, just buy an index tracker. Yeah, you could. There's nothing wrong with that. David said, sound is good here. Okay, so everyone else's sounds good. David, what's your take on freezing ISA allowances for 5 years? Oh, David, I was just grateful it wasn't worse. And they said, well, we're going to reduce them. An ISA is an asset. They don't like assets and private wealth because you can't do redistribution. Okay. Rachel Reeves has on a wall as Chancellor a picture of a woman who was co-founder of the Communist Party in the United Kingdom. If you've read Karl Marx and Das Kapital, which is the formative text of communism, then you know assets in private ownership, wealth passed on through family is an anathema to the social good. So from each according to their abilities, give me your assets, Alpesh. To each according to their needs. I'm going to give it to people who don't have assets. Don't read Das Kapital. Read Animal Farm, George Orwell, if you haven't yet, because that's all it is. When you talk about losing my pension, do you mean the state pension? I have a private pension that is doing quite well, up 30% this year. Losing as in taxation. You've got a pot of money, and when it comes to drawdown, well, first of all, you know there's a cap on how much you can have in a pension. There didn't used to be. You know there's a cap on how much you can put into a pension each year. There didn't used to be. You know there's a cap on how much you can withdraw tax-free. There didn't used to be. Okay? There's a cap on how much you can pass on under inheritance tax-free. There didn't used to be. And it was more you could pass on. What I'm saying is, when somebody's got a pot of money, you can work out bit by bit how to take it. When I trained as a barrister, my law degree, I did tax law, and it's pretty straightforward actually. You just work out, well, your allowances will go down, the rates go up, and it's not always rates that need to go up. We'll cap this, we'll reduce this, so psychologically it doesn't feel as painful. Oh, there's a ceiling on how much can go in your pension, slightly over $1 million before tax implications. So there's all of these little ways in which things can be taken from you. If you live over 75 and you try and pass your pension on to your kids, on your death, inheritance tax would be up to 67% if you're used up all your other income tax allowances. That's the worst case on that. Don't want to frighten anyone, but the trend is clear. Just like the trend in property ownership and being a landlord has been clear for a long time, which is it ain't going to be lucrative. Just as the trend, I bought my first property when I was 26 in 1997 in St John's Wood, a 2-bedroom apartment that I moved into Hamilton Terrace when I was 32. Okay, into a multi-million-pound apartment at 32, Hamilton Terrace. I lived opposite Kaveh Al-Mutai, who was the UK's biggest paid employee. He was a hedge fund manager. And I literally directly opposite him. I was at 63. He was at opposite. Like hell, I could do that today. I.e., somebody at 32 could do that today as easily as I could back then. Okay, no chance. So the trend has been clear. For non-DOMs, I've got friends who left long before Labour came into power because the trend was clear 20 years ago when they said pay 50 grand or, as a cap, or else. The trend's been clear on a lot of these things. It ain't going to reverse. Trump ain't coming to our rescue. Okay, so you can see which direction is. Now, all that means is, as I said to somebody earlier, you don't have to work out exactly how much worse off you're going to be or better or whatever else. All that means is you've got to get the maximum performance and just don't spend like crazy, because the future is even less clear of how much money you're going to need. Alpesh, I've done my money in AppLovin over the last 8 weeks. Would I be wise to sell and move on to something else? Usually, Andrew, in a generic sort of, if I gave you generic information for stop losses, it's this. If it drops X, sell Y, and work out X for 10%, 15%, 20, 25%. Then those are clear numbers for X. Y is based on your risk appetite. Okay, so that's what you should do. Because then, if it keeps going up, you and I don't need to guess the future and whether it's going to go up, because those stops will never get hit because they're trailing. If it drops X, sell Y, X1, X2, X2. And also it protects you because you're exiting on the one thing you can control, which is your risk appetite. And that's the best way in which I do it, rather than trying to work out what the future holds. Hidden behind Grammarly app symbol. Okay. Yeah, I know those bloody symbols. I've got a load at the side of my screen. I can't get rid of them, and God knows what they all do. But anyway, I had to expand the file section. File. Santosh, mean reversion happens in I think we discussed this earlier. Connor, with the large number of available Trump trades, of course it will be bespoke, but with a total loss around 2% portfolio, if you hit stop loss, how many trades or what percentage of portfolio would you be willing to risk in total? Oh my God, Connor, that's going to come down to the individual. Some will say none. They'll say, look, I don't want any of them. What I want, and by the way, I go closer towards this, is what I want is whether they're Trump or not. Value, growth, income, cash flow, sorting. Do they tick the boxes? I just want to use your conventional way, Alpesh, because that's your process. That's what I want to use. Okay, and that'll be what I would go towards. Okay, I just don't know if I can answer that just in generic terms, because you need to know a lot more about your appetite, Connor. And the danger is a lot of these pull back, let's say, so you've got to get that risk element right, and a 20% stop might be too little. You might want to put it 30 or 40. What ticker symbol do you invest in? S&P? Worried I'm in the wrong one. Oh, Joanne, you know what? Paresh has been asked this a lot recently as well, and I'm gonna I can't remember off the top of my head. I'm gonna have to look it up, because a lot of execution only brokers won't give you a symbol. If you call them up and say, what's the ticker for S&P 500 I want to buy it, they won't tell you. And the reason they won't tell you whether it's that or anything else is because they see that as advice, which is stupid, because you've got an execution only with them. So I'd have to look that up. So many of these have high MACD. Oh, exactly, Peter. And what's happening with that is that the average is moving up. So a lot of the market is, as you would expect, running more on momentum than previously, and valuation is still important, but temporarily less so. Okay, and if you're risk averse, you wouldn't get those. If in doubt, leave it out. If you're risk averse, you wouldn't get those. Okay, and you wouldn't have FOMO because you'd say, "Hey, that's not for me." How about Oracle being a good friend of Musk? He's been out at he's just not come on the radar. It's just not come on the radar. Are there any questions I've missed? Would you dump non-US traded oil company stocks, divert to XM? I've not thought about it. I'd need to think about that. Will trade war put the markets at risk? There's a lot of things that can put the markets at risk, but the thing I'd analyze is the S&P 500. Okay, the S&P 500, and what I said about that. So I'm not going to pre-anticipate what might put it at risk. I don't stay awake worrying what's going to put the market at risk. Okay. Do you think there's more growth for Tesla and it's worth getting into? So I've done the Tesla trade structuring as I do it, which is if it drops 50%, am I okay to cover that and say, yeah, I'm going to have to hold this longer? But if it goes up 50%, how much do I want to make? Now, I'll give you an example. And actually, I just did a video on YouTube on that today. Actually, I've done let's say I wanted to make £1 million, because I think Tesla's going to go up 50% for argument's sake. Okay, I'm going to show you the Tesla trade for me, and I'm going to use big, simple numbers because they're easier to do the maths on. right? Okay, Tesla. Right. So you look at Tesla and you say to yourself, yeah, I think in a year, whoops, this will, I'm just going to show, let's bring it all the way down to, I think it's going to go up, or maybe even not a year. Let's say we give it a bit more than a year. I think it's going to go up 50 odd percent. All right. So you're at 328 and you think it's going to go to 477, which is slightly than an all-time high, right? And there's a lot of momentum there. And you say, I want to make $1 million. So you put 2 million in. Now, what happens to that 2 million? I'm going to use really big numbers. Okay, what happens to that 2 million if you drop 37%? Actually, let's make the maths really easy. Let's say it drops down to here. Now, you're down $1 million. And you've got to have a difficult conversation with family members. Now, instead of $1 million, it could be 10,000. It could be 5,000, it could be 1,000. But you might say, well, wait a minute. I don't think that's going to happen. Not with Musk and Trump. And if it does, I'm willing to hold it. Okay, are you willing to hold it if it does this? Could it do that? Well, there's no reason why it might not, but looks a little bit unlikely at the moment. So you might think, you know what, I can take the pain. I'm going to put that in, but I'm even willing to turn it into a longer term investment. Now, I wouldn't normally analyze things that way because I have a very simple rule, which you're all familiar with if you watch my webinars. But I think with Musk, this is the issue with it at the moment. The problem isn't going to be that for people. The problem is they're going to get greedy. If they get it right, then they're going to put more money into it and then they're going to mess it up and make a loss, even though they called the direction right. Others are going to panic and exit, and then it's going to rebound and they'll have missed it, so they're still going to mess it up. The problem isn't what I've told you. The problem is people have a tendency of messing these things up time and again, which is why we handhold them on the program, because then they ask me, oh, what about this, what about this, what about this? So what they tend to do is either get out too soon, or as it goes up, keep adding more, push up the average price, then it drops a little bit. They're so overexposed that they end up losing all the profits they could have had if they just left it alone. There's a whole way retail clients find of messing up good trades. You fascinating. Thank you. No doubt, it'd be great to hear your thoughts on how you retire outside of the UK to avoid my pension being squandered by the UK government. Martin, I don't think I'm the expert on the expat side of things. The advantage you have at the moment in the UK, and I think this is going to go, I just think somebody at the Treasury and in the Labour Party hasn't woken up to it yet, and I might wake them up to it just to be bitter, is you're not taxed on residence. Sorry, you're only taxed on residence, not on nationality. If they start taxing you on nationality as America does, which is why Elon Musk doesn't live in Dubai, Monaco, or Zug in Switzerland, and he lives in America, not because it's the greatest country in the world. He paid 10 billion in tax in 1 year. Okay, he could still run his businesses from offshore. Richard Branson seems to manage it. Dyson seems to have bloody managed it. A lot of Brits seem to manage running their businesses offshore, don't they? Not so much the Americans, who earn a hell of a lot more. How come they stay in America? Because wherever they go in the world, they're going to have to pay tax. So if you want to stop the brain drain, you tax British people on their passport, not their residency. Okay, so when they bugger off to Dubai and say, screw you lot, I hate you. If you hate your country that much, don't want to pay tax, give up your passport. Good luck getting one as an Emirati. You're not going to get it, right? So you're buggered. No, you pay tax if you've got a British passport. If you expect the Royal Navy to come and help you wherever you are in the world and extract you after a number of years, then you pay British tax. And that helps us in Britain anyway. For those of us who have got no plans to leave, I could leave. Greatest irony of all, I could leave, son of an immigrant. But no, the brown kid is more likely to stay than the white ones who've been here for years, who keep going, I'm off now. I've had enough, not paying any tax. So yeah, I think sooner or later that's going to come in the next 5 years. They're just going to change it. Because if you get rid of non-dom, think about it. What's non-dom? Non-dom is we're going to tax foreigners, foreign nationals, on foreign income kept in foreign countries, not even brought to Britain. We're going to tax them on that. Well, if you're willing to do that, why don't you tax British nationals on British money by a British person, wherever it is? Makes sense? The Americans do it. So yeah, that's coming. And I'll tell you how I know it's coming. Because if I thought it, then somebody else has thought it in government, and they're going to make it come over. It's an asset. If you're abroad, hey, you're not living in Doncaster or Armley as I do, or Leeds or Bradford. You're living in Dubai or you're in Switzerland. Why aren't we taxing British people in Switzerland and in Monaco? If they're rich enough to live out there, why are we not taxing them, says the Labour Party? It's going to come. Okay, any questions I missed? I better go otherwise because it's 10:22. Andrew goes, brilliant suggestion. Andrew, it's going to come. Thanks, Alpesh. I think this is sort of stuff so important. The younger audience would be incredibly wise to pay more attention than they do. Thank you very much. ASML. I'm going to have a look at that differently, only because it's getting a bit late. Marketing, beautiful. Cork. Thank you very much. Write a book on this. Thank you. Kishan, I'm in Canada and the tax situation is similar. We should do a citizen exchange with US socialists. Oh, I know. I've heard the Canadians are getting really miffed with Trudeau, and Trump really hates Trudeau. What do you think about drilling for all? Guys, what I'm going to do, because it's 10:22, I think it's only fair. I let you go. I better go. I've got a busy day tomorrow. I've got to go to LinkedIn for a start. But I was going to look at the markets now. Thank you. Please email me any other questions you might have. I know there's Palantir and there's all these other questions. I better leave you wanting more, and we'll come to it at some other point. But I hope you enjoyed it. And thank you. Yeah, you're right. Elon's going to go reside on in Mars. No, the American government taxes you. There's only two governments in the world which tax you based on nationality. The United States, you'll never guess the next one. Don't put it into Google. Actually, you'd have to put it into Google because no one's going to do it. Eritrea. But it stops the brain drain. Brits are worried about the brain drain. Oh, you're going to lose talent if we tax British people too much. Well, fine. You know, if this country has given you everything up to the point where you're leaving, presumably you're leaving because you've made a lot of money. You were born here. Now what you're saying is, that's the point I'm going to leave. Geez, talk about unpatriotic. At least when I say buy American stocks, that's patriotic because it's Americans working for a British person. The British person is bringing the money here. Guess where I spend my money? In Britain, because I live here. I've got a 6-year-old son and all the rest of it. I'm happy doing it. I'm as happy as Warren Buffett living in Omaha. I don't need to go to Bali and all the rest of it. I can do a trip now and again. I'm as happy as when Jeff Bezos, when he was worth 10 billion, look at the video on YouTube, was asked, why are you going around in a Honda? And he says, does the job. When you truly love what you do, more than money, and Steve Jobs said this, if you're going to be in business for money, forget it. You're going to screw it up because you need to love it. So if you love your country more than money, I think that's the right way round. If you're grateful and all the rest of it, you stay put. I can move. I don't want to. Not because the sunshine is always shining and the warm beaches on London's coast are phenomenal. No, because, yeah, I owe it all to this country. Buggering off seems like sticking 2 fingers up to it as much as you would to your parents. So anyway, that's my view. Left SJP today, hopefully onwards and upwards. Thank you, Rod, Colin. Thank you all. Thanks, everyone, for a phone a couple of weeks ago. Ed, good. Yeah, my pleasure. We'll be up tomorrow. It will chat, and I might even do it tonight because I think I'll be up for about another hour. I'm just going to check the US markets and all of those things. Listen, guys, I really will go now because I could, as you can see, talk forever. So I'll go. Thank you all for being on the call, and I'll do more updates. I'll do the ETF one, and anything else you want to see, just email me and let me know what else you'd like to see. So thank you all for staying on late. I hope you enjoyed it. Oh, I've got some more files which I will share with you. I'll share more stuff, just general stuff about the program and so on, which is on there. So we've had a good number. Actually, we had a bigger number turn up than we normally do if we do it at 6. I think maybe 9 o'clock's the number, the time to go. So that's good. I might do more of these going forward. Get in touch if there's anything. If you'd like a tour of the program and how we do things and why it works so well, then alpeshpatel.com/links, and there's a and you can do a tour with Paresh on there. Thank you very much. I look forward to speaking to you all soon in person, and more events I'll be putting up. I'll put on my Telegram channel as well. Any questions, just email me afterwards. Thank you all very much. Goodbye.